Hi, thank you for joining me. My name is Tina Hostler and I'm with Century 21 Property Shop in Huntington. And the reason I'm doing this video is sometimes people get lost when it comes to searching for a home. They don't know where to get started. And there's all kinds of different loans out there, so they really, like I said, just don't know where to get started. So I wanted to put together a little video just to give you some information so that you feel a little bit more knowledgeable on where to start and what to do. So there are several different types of loans that are out there, and everybody qualifies for something different, and it can be according to your credit score. It can be if you have any down payment money saved up. It can be if you require down payment assistance. So I'm just going to go over a few different loans that I've dealt with over the past few years, kind of the loans that most of your lenders are going to be talking about to help you. And let's see here. I also wanted to let you know that it is very important that you get a pre-approval so that if you find a home that you're interested in, you are ready to make an offer. A lot of times the market is moving pretty fast, so if you see something that you like, sometimes you got to jump on it pretty quick. I've seen houses go on the market and sell within the first 12 hours that they were on the market. So having that pre-approval is important so that you can make that offer and show the seller that you are a serious buyer and you're ready to go. So let's talk here. I was provided some information by Doug Carroll at Ruoff Mortgage. I work with Doug a lot. He is a great lender, very knowledgeable. He is an expert at what he does. And so he's provided me with this information. And I'm just going to give you kind of a walkthrough on each one of these loans. And you're welcome to take notes if you want to. And in fact, I'll probably put a little paper together that if you want to private message me, I can send this over to you as well so that you have all the information as well. So I'm just going to start with conventional loans. And I'm going to read a little bit here off the paper to make sure I get it correct for you. Of course, there's different terms and conditions with each different loan, but with this one here, basically they're trying to meet the criteria of Fannie Mae and Freddie Mac. Those are the lenders that we'll be working with for conventional loans. And about 35 to 50% of mortgages are conventional loans. Now, conventional loans do require a down payment, and I know that through Ruoff they have a program that is 3% down payment. So they want your minimum score. It says minimum score 620, but they would really rather see it at 640. So push for that 640 score. Let's see here. You can have the seller pay up to 3% of your closing cost. And so that helps you so that you don't have to put more money down because you do have your down payment that you would have to come up with, which is the 3%. But if the seller helps to pay your closing costs, then that's less money that you have coming out of pocket. So, and another thing too, there are some down payment assistant programs out there to help you with that. And Doug can also fill you in on those programs as well. The one reason that I like conventional loans, when you put an offer in on a house, towards the whole process of purchasing a home, after your inspections, if you choose to have inspections, the appraiser will come out and they are going to put a value on that home. Now, your appraiser is going to make sure that they're confident that the value is there, that it's a good home for you, because it is a 30-year loan. You want to make sure that your house is going to last 30 years for you, if not longer. So they want to make sure they're going to be checking different things. Some of the inspectors are going to check some of the same things as well. But my thing about conventional loans, the appraisers don't seem to be as, what's the word I'm looking for? Not detailed. They're not as hard on the criteria. And I'll explain that a little more moving on to some of these other loans so you can see what I'm talking about. I'm going to move on to FHA loans. FHA loans is insured by the Federal Housing Administration. The minimum score on that is 580, but again, they'd really rather see 600, so push for that 600 score. Down payment for FHA loans is 3.5%. And when I say 3.5%, that would be of your purchase price. And that can be also gifted by a family member. Let's see here. The buyers are required to set up their taxes and insurance. So when you get this loan, they're going to lump your house payment, your property taxes, and your homeowner's insurance into one payment for you, so that you don't have to come up with those payments during different types of the year, or your insurance monthly. It's going to be all in one payment. With this one, seller can pay up to 6% of closing costs. And they also will allow manufactured homes with FHA loans as well. Okay, so with FHA loans, let me see if I have a little more information here on, this is what I'm talking about when your appraiser comes out, what they're looking for in this house. When an appraiser asks a seller to fix or repair something in the home, to meet their guidelines, that has to be done or the deal is going to fall apart. So this is some of the things that FHA, USDA, and VA are going to be looking for when the appraiser comes out. They don't like to see any peeling paint. So like sometimes you'll see around the trim of doors, that trim piece there, sometimes it's peeling paint. They want that scraped and painted. They do not like peeling paint. And I've even seen sheds, garages, barns, stuff like that. So if you are putting your house on the market and selling your house, that's one of the things that you're going to want to do in advance, so that you don't have to deal with it during the, the home selling process. Any leaking, they don't want any leaks in the plumbing, no leaks in the roofing. They don't want to see any fault in your foundation or the structure of the home. They don't want any defecting roofing, so they want a good roof that's going to last you. They want to see insulation in the attic. Let's see here. Repair or replace loose or missing handrails. And I know there are some specifics on that, like if there's so many stairs, there has to be a handrail type of thing. GFCI outlets. Those are the ones that you see a lot of times around in bathrooms and kitchens. And there's a distance between like your sink and your outlet. They want to see that GFCI there. So that's another thing they look for. Broken or inoperable windows, doors, and locks. Inoperable or broken overhead garage doors. Loose stairs, walks, driveways, and flooring. Anything that's a safety issue, they're most likely going to call out. And like I said, when the appraiser calls something out to be repaired, that information is passed on to the seller. They will repair those items. The appraiser will then come back out, make sure the repairs are done, and then most likely after that, it moves on to underwriting, and then you're almost done. You're ready to get your house. So that's some of the things that an appraiser looks for in like FHA, USDA, VA homes. As I was saying before, with conventional, the appraisers aren't as big sticklers as what they are on those other loans. So moving on to USDA loans. USDA is a very popular loan in the area that I live in. It is 0 down payment, and that would be why. It does have income maximums, but the maximums are actually pretty high, so lots of people will still qualify for this. Minimum credit score is 620, but again, they really want to see 640. Again, no down payment. Now, to be eligible for a USDA loan is one thing for yourself, but you want to make sure that your home is in an area that's USDA eligible. All your smaller towns, in my area, I live in Huntington County, so our area is all open, and most of the surrounding counties are. Now, when you get to the bigger towns, like Allen County, Fort Wayne, most of those areas are not included in the USDA. And there's actually there's a map that you can type in the address that you're interested in to see if it is eligible for USDA financing. I do know that Marion over in Grant County is not included, but part of the rural area on the edge is. So you just got to make sure that you're within that area if you're planning on using that loan. And your lender is going to check that, and your realtor is probably going to check that for you too. Buyers are required for escrow, and escrow is that, like I said, in the FHA loans, that's where your taxes and insurance are included in your payment. It typically takes anywhere from 30 to 45 days to close on a USDA loan. That to get your pre-approval, that has to go, they have to run that through USDA, and then before you close, they have to get an approval again through them for that. So sometimes it can take a little bit longer. You're basically in a line with the rest of the people that are doing USDA loans. But, you know, my lender, Doug, I seen him close one in less than 20 days. So that doesn't always mean it's going to take that long. With this one, seller can pay up to 6% in closing costs as well. And moving on to VA loans. This one here, minimum credit score of 600. This VA loans is also a 0 down payment. So any veterans would qualify for this loan. They do have to get a certificate of eligibility, which the lender can help them get that as well. Let's see. Again, buyers are required for that escrow to pay their taxes and insurance with their payment, and seller can pay up to 4% of closing costs for that. And then VA loans do require a pest inspection to be done. So, and I can tell you too, like back to the USDA loan, if you're interested in a home that's in the country and it has a well and a septic, I do believe that USDA wants a water test done as well. So that's just kind of an overview of the mortgage loans that are typically used and, you know, that I've been working with in my area. There is a lot of information to it, I know, but I am here to help you through that process. I can refer you to a lender, and again, they're going to help you through this whole process. You aren't expected to know everything. I'm a realtor, so I know just enough to be dangerous. That's why I'm reading this off of the paper, but your lender is the expert. He's going to be able to tell you everything that you need to know. Anytime I have questions, I message my lender to make sure that I'm giving out the right information, because it is a lot of information. You're not expected to know all this stuff. So you're welcome to leave any comments or questions down below this video. And please feel free to message me with any questions. I'm going to have a link also that you can click on that'll direct you right back to my Facebook Messenger. And like I said, I can provide this information to you on paper so you have it as a reference guide, and I can also refer you to a lender. So I appreciate you taking the time to watch my video. I hope it was helpful for you, and I hope that I can work with you in the future, whether it's buying or selling a home. Have a great day.